So in any financial plan that you create, there are 4 phases your advisor will take you through. First thing they're going to talk to you about is your cash flow. Then they'll talk about protection, then assets and liabilities. Of course, the reason we want to talk to you about your cash flow is because you're dead in the water without it. Without income, you don't have any room to plan. Now, the most important thing about your cash flow is your discretionary income. After you pay for your food, clothing, shelter, and transportation, we call that discretionary income. To start a financial plan, consider using a minimum of 20% of your discretionary income to leverage the plan, the ideas that you and your advisor talk about. From there, let's get into your protection. Why are we so crazy about insurance? Because we know that life happens fast. And whether it's your car or your health, your ability to go to work, um, or your house or your life, we know that leveraging small bits of dollars to access large pools of money is the best way to make sure that you don't have a catastrophic loss instead of self-insuring. So this is why insurance is so important before you start talking about accumulation and growing your assets. Of course, the third piece is assets. We want to know everything. We want to know about your houses, your other investments. So yes, we want to know about real estate. We want to know about your cars. We want to know about your collectibles. We want to know, of course, whether or not they're adequately insured. And we definitely want to know about your bank relationships. Whether you're in credit unions or regular bank accounts, online banking, we want to know about your 401ks, your 403bs, and your HSAs, all that stuff. Because we're going to categorize those things into three other areas. The other 3 areas we're going to categorize your assets into are taxable, pre-taxed, and non-taxed. Those affect in retirement how much money you get to keep. The fourth thing we take a look at then is your liabilities. We're concerned about your mortgage. Yep, we may not be mortgage brokers, but we're concerned about the rates you pay. If there's an opportunity to refinance your home and save money, we'll make that recommendation. Or if there's an opportunity to lower your interest rate or decrease the amount of time you pay the house off, so you can have more cash flow later in life, we'll examine that to see if it works for you, how it works for you, that's your plan. We want to know about your student loan debt, your auto loans. We want to know about it all. Because at the end of the day, your assets minus your liabilities equals your net worth. And that's what you live on for the rest of your life. So we want to increase your net worth so that you live comfortably. This is where we begin to create a pension-like environment for you for the rest of your life. That's financial planning.